Welcome back to Indy Housing Market. I'm Kyle Morris with Morris Property Group and FC Tucker.
And I'm Shelly Walters with the Shelly Walters Realty Group and FC Tucker, and we are so lucky today to have Patrick Matters with us. And Patrick Matters is an awesome lender here in town with First Financial Bank, and he just told me it's the fourth oldest bank in the country. That's interesting information. Where did they get started?
Terre Haute, Indiana.
So just curious, what are the three older in the nation? Wells Fargo, maybe?
Couldn't tell you.
We could make stuff up. I'd say Wells Fargo is older. First Internet Bank is probably older. I don't know. That's just interesting that it's the fourth oldest in the whole country. That's
First
insane.
Financial Bank. Yep.
So,
all right, so we have you here because I had a conversation with you last week, and you said some interesting things about what you're seeing and dealing with in the most recent type of atmosphere that we're in real estate, and I was like, that'd be some stuff to talk about because I think Kyle and I are seeing a lot of changes and feelings, or just it's a little off kilter for some reason.
Market's wonky.
Yep.
Yeah, a good word.
That's a scientific word. Yeah.
What are you seeing?
You know, the last couple of weeks has been challenging. We've seen that, my phone used to ring all the time. It's really not ringing. Interest rates did bump up close to 7.5 to 8%. So I think it's going to be like this for a little bit. Okay, no problem. The employment report came out on Friday, which was a miss, which is good for us. So rates did come down. So we're thinking rates may have topped out, but nobody can predict rates.
Yeah.
There's no scientific. You got people on Wall Street that predicted 6 rate cuts this year.
First in May, right? So I keep talking to people like, well, May's right here, so fingers crossed, but we're just going to go back down to where we were because it's gone up in the interim.
I wouldn't be surprised if we only have one.
Yeah.
Well, and everybody's always like, what's going to happen? I mean, just day by day. We don't know.
Yeah.
Well, the biggest thing is inflation.
Yeah.
They have to control
bad.
inflation. Powell wants at 2%. It's going to be hard to get there.
Mm-hmm.
Until we start seeing inflation come down, rates are going to stay where they're at.
Well, and rightfully so. Like, I know it's inconvenient for everybody. We've talked about this. People, this is going to be long-winded here kind of thing to get back to where I want to go. But, we've talked in the past about people who are like, oh, the market's going to crash and all this stuff. Like, people don't understand what that means. I mean, you're talking about families out of homes, like detrimentally, destroyed for almost an entire generation. Well, I don't want to say a whole generation, but you got to think from '08. I mean, we have people who are buying now who are leery of buying because of what their parents went through, 16 years ago or whatever it may be. So and that really stems from a place where people basically want something they can't afford because what they want is like out of their reach financially, right? For what it costs, right? And that's unfair, and I totally get that. But like for that to happen and the snowball effect of what that creates within our society of the collapse of things is just not worth it. But at the same time, like I notice it, and it's going to be really, really hard. We were talking before we even started all of this, like we have the highest amount of debt right now, right, in our nation. I just paid down some of my debt, and it's not even a lot, but like I acquired some over the past 3 years. I almost don't even know how I got there to a certain extent because like I had money, but at the same time I was just like, yeah, let's do this, like I'm getting points. And then I was like, well, that didn't work out. I know what I'm doing financially. I was like, it's just a whole thing. And even for me to be on top of those things and to like almost fall backwards into it a little bit, everybody else. And like there's people who are paycheck to paycheck, or let's say you have a catastrophic event where you have an illness of a parent, an illness, like I just went through that, or an illness of a child, or, I mean, it could be anything. Furnace goes out, car goes, something happens, suspension goes out on a car, and people are putting on credit, and then it's just all catching up with us at this point.
Are you seeing more debt to income ratio getting higher and higher?
Yes.
And is that kicking people out of the market as well? Not just talking about interest rates, but what's kicking people out of the market in today's world?
Student loans are pretty big.
Yeah.
Credit card debt's the highest it's ever been.
Yeah.
And it's got to stop sooner or later because people are just borrowing and borrowing, and at some point they can't borrow no more. So, yeah, we're starting to see a little higher debt ratios. I would say it's really just hurting the first-time home buyers too.
Yep.
That's where it really I'm seeing. I think it was like 28% first-time home buyers last month. Number needs to be higher, but they can't afford it.
I'm also.
yeah,
Oh, you
sorry.
go ahead. You
I was
ahead.
just going to say, and the concern now is for first-time home buyers is what might happen if this the
Settlement and all
the
that
settlement
stuff,
that's
yeah.
going on is a first-time home buyer potentially ending up paying commissions on top of everything else. When will they just totally not? What would that word go away? Will there never be a first-time home buyer? I mean, like at some point.
The idea too, though, like so with that, so it's like you got to have this extra money, and so first-time home buyers are really struggling, right? Specifically in certain price points, I'll say that, right? And then I have seen, I know it's always been a thing, but recently in the past 3 years, this is going to be like a little bit wrong word to use, but I feel like on my end from where I sit and the expectations that I see with sellers, the entitlement to pay off credit card debt by selling your house is like the highest I've ever seen. Because people will be like, hey, I want to buy a house, or we're going to sell our house. We have this much equity, and then I want to buy a house, but then I also got to pay off the truck, and then we've got 2 credit cards bills we want to pay off. And I'm like, what? Like
Yeah,
we don't
that's
get
irrelevant.
to do all of this
yeah,
stuff,
that's not, they're not in the same category. You
Yeah.
were saying that just all of that in regards to like people's average car payments are much higher.
Yeah, the average car payment I think is above $700 per month.
That's insane.
That used to be a mortgage.
It's crazy.
Yeah.
So we're seeing a lot of that. If you notice, just around here, all the apartment complexes are going up.
Mm-hmm.
First-time home buyers can't afford houses. And
Well, they
they're
also can't afford the rent sometimes because
rent.
the rent's really,
It's super
higher
high.
than standard.
I was talking to my buddy. He has a coworker, and the coworker doesn't own a home, right? But has a $1,200 a month car payment, and I'm like, that's the
Yeah.
craziest thing I've ever heard in my life. But like, it's because the dream of buying a home is so far off as attainable. It's like I want to get the car that I want instead, right? And because like it feels that out of reach for her, because pricing, saving up, all of these things, it's just it's mind blowing to me. But here we are, and it's not like this is one person. Like this is our whole society, as you're just talking about, right? And I don't know how we got here. We could argue about it a whole bunch of different ways, but it's just a slow trickle, and here we are. And I don't know how we get out of it. And like to what we really started on is to control inflation, and nobody's going to like that because that means it feels like you have less money. That's just how it works.
So you're seeing some changes, and when do you feel like that you started seeing changes? What, like the past couple weeks, or like, because we had spring break, and that was
Yeah.
just kind of like, we thought after spring break we'd start to see the market, tick up, get going for the spring market, but it doesn't seem to be happening quite a bit. I mean, pendings are high, but listings aren't going up. If we start talking about our stats later, the houses are selling, days on market, but there's just a feel out there that it's different. So what are you seeing most recently that just is not normal or not the same as it has been?
One thing with this bank here, we do a lot of portfolio products. So we keep them in-house. So we deal with a lot of people that don't fit inside the Fannie or Freddie box. So our business has been pretty strong. But on the Freddie side, it's slowed down.
And can you help people understand what Freddie side means?
So when we do a mortgage, we'll sell it to Freddie. Then they'll service the loan. Or they'll send it to a subservicer and they'll service the loan. So
And the portfolio loans you keep in-house as
we
part
keep
of your
in-house.
asset.
Exactly.
Are you seeing any, because whether or not we believe what they say on the internet and all the information is they're saying, there's more and more defaults happening. Are you seeing
No.
that at all?
No.
Yeah,
No.
I didn't think that's where we are.
There's
right?
just too much equity.
Right, exactly.
Yeah.
And plus our credit standards since the
Oh,
meltdown.
Yeah.
Frank.
Yeah. Now you have to verify income. Now you have to verify stuff. Before you didn't have to do that.
Yeah.
It's the most qualified buyers have to be ever, quite honestly, right? Since 08.
Yeah.
Right,
Okay.
but it's just weird how there's the most defaults ever. But so that gets to the what the buyers need to do, and he and I were talking. Buyers need to understand. There's a lot of frustration when people go through the lending process. The lender, the loan officer, is the person that just seems to be the pain in the butt of the whole group because they keep asking for stuff. They need more and more and more and more. But that's because this is where we are. 2008, you didn't have to, but you don't just get $500,000 or $200,000 handed to you by saying, I make this much money. You have to prove all this.
Yeah.
Right.
And to ask for that, and then, it's just when people want you to do this and help you and get to the point, there's some things they have to do too. So what is your biggest struggle with working with people to understand what they need to do and provide to you?
Well, right now, we're not the only mortgage company, but there's a lot of pre-approvals. I may have 10 people that are pre-approved just looking for houses. Had one that I pre-approved back in February. Had to re-ask for documents, but they expire. Pay stubs.
Yep.
They said, no, we've already sent that to you. I said, no, we
need current ones.
Yeah, exactly. So we have to update, and I think that's the biggest problem that we run into, is we're sitting on all these pre-approvals, and we still have to go back and update.
But
Because we're not finding houses as fast as we
Right.
you know.
We're not. But I also think that's a society. Like I always get into like how everything's intertwined, but like societally, I don't know if that's a word, but I'm gonna use it as a word. We have become such creatures of convenience.
Bingo.
And instant instant gratification.
Yes,
but
it's
like,
very true.
hey, I took care of this before, and you're like, hey, I need you to take 3 seconds to send this again. What are you talking about? You know, like it's just not a thing, and it's just really interesting.
Well, there's a reason for it. I mean, just you as the loan officer are putting your name on that document that says they're pre-qualified, pre-approved.
Correct.
We don't want a pre-qualification, sorry. Pre-approved, because you're going to go to closing. I, as a listing agent, am hoping to God you did what you were supposed to do. And you know you're a great loan officer. You've been in the business forever. This is what you need to do. And for a buyer to say, no, I've already done that, it's not important, you can't help them.
Yeah.
I can't help them as a
Right,
buyer's agent either if I don't have that updated document. So it's trying to understand the process that we're all trying to do what you're asking us to do, is help you find
Plus,
a home.
on top of that, like rates have changed.
Well, that's another thing.
Right.
If I
Like it may be a totally different situation.
I pre-qualified somebody back in February, rates were lower.
Yeah.
Now they're higher, so they don't qualify for as much.
Or their payment's higher. Do
Right.
you want that?
Exactly. So we ran through that the other day with the first-time home buyer. So we're seeing that, but with the automation that we have, I mean, it takes you 2 seconds to take a picture, upload it, and come straight in.
It's so
Yeah.
quick.
It's taken a lot of responsibility away from me.
Yeah.
These people that know me know I'm no good on paperwork. I do sales. So it makes it easier for me because the process that we have, and we can close loans in 14, 21 days now,
Yep.
depending on the appraiser, and the appraisers are getting appraisals back because they're not as busy as they were.
Yep. They're getting stuff back quicker.
Yeah.
The other thing I see happen is, and this is just buyers in general.
Uh-oh. You look like you're getting ready to go.
So I almost feel like I wish we still did kind of sit downs with buyers and lenders, just to understand it. Because one of the things I see is it doesn't happen very often, but it happens enough that it's like a thing. It's like, let's say you get a gift, especially with like baby boomers, like aging, and you're starting to see more gift funds happening, like sourcing the gifts. Right, and like that becomes like an issue. It's like, they're gonna send it to me, and then they end up sending it the wrong way, or it goes to the wrong account, and then you're like, hey, like we have to season things, like all these other things. I wish we did sit down still with lenders. I really do, but it's also comes back to like everybody's life is busy, and like you're basically like, imagine having to sit down with somebody back in February and be like, hey, we may not even be buying till April, so why are we sitting down with you?
Right.
So it's hard enough to get somebody to send you a document, let alone, hey, can you come sit down for an hour so I can explain you this insanely boring and complex process? Yeah, like sign me up for that. I don't know, it's just interesting. I think a lot of our headaches are actually super avoidable. So.
Well, first-time home buyers, I always sit down with them. They can go
That's
on
awesome.
and they can make the application. They'll do everything online, but I want them to come in and just sit down and tell them this is what it's going to be, this is your payment, and this is what you should suspect throughout the whole process of the file.
Yeah.
People that I've done loans for before, they don't want to talk to me.
Like, we know how this goes.
Yeah, they'll upload everything and, what's my rate? There's your rate. We're closing on the 31st. I'll see you there.
Yeah.
That's how it works.
What's my payment?
Yeah.
Well, it's just interesting. To like what Shelly was talking about. Past 3 weeks have been a little odd. Stuff sitting that I didn't think would sit. Buyers are. I think people are trying to avoid paying over list. I think they bucked back to that really quick. So people are waiting to see if something gets through the weekend. The only thing that really sells through the weekend is if it's like really good or like right at the right price point, right? Which is hard because sellers want to, kind of push price a little bit these days.
And I'm seeing price drops. So I'm
price
seeing,
drops.
I really want to maybe look into that a little bit more, but I'm seeing more and more price going down. I mean, for me, the average days on market, they're still in the 30s in Carmel and stuff like that. But there's homes that are sitting longer.
Yeah.
And, some of the people who have tried to get their house listed for higher than they should have in the beginning. But yeah, the buyers are really bucking on going over lists very much. I mean, they'll go over a little bit, but I don't know. The mentality of like 21 and 22, was it because we didn't have very much inventory? No, because we still don't have very much inventory.
Yeah.
Was it because they needed houses more than the people do today? I don't know what it is, but most buyers now, when I tell them they're going to have to do higher, they're like, okay, maybe 5.
Mm-hmm.
But that 50, 60, 80,000 over,
It's not a thing.
they're
anymore.
done.
Good.
They're not doing that. And to say the appraisal gap, we still have to do, but to say, and you're going to have to pay more than they just told you it was going to be appraised. And I try to explain that to the buyers, like, why would I do that? I didn't have one buyer ever say that to me for like 2 years. Why would I do that?
Yeah.
Now they're like, why would I do that?
Well, and like with showings, we were talking about this also. So like, I'll get a ton of showings, but not like it used to be. So like, I mean, I'll get a really good property and I'll get 10, 15 showings, which is actually not that many compared to like where we used to be on something
Right.
like that. And
Right.
I used to have like 30, 40.
Right.
I have some houses where I'll get like 5 and an offer. And we were talking about this. It's like, I can see where this is going. I've got 5 showings and I've got an offer. Like this isn't going to get better.
It's not going to get better.
by next
Well, it
weekend.
never does. Because we're going
It
to say the
never
days
does.
on market always makes everything slow way down a lot faster. Because if you're at 10 days, your offer is going to go lower. If you're at 20 days, your offer is going to be even lower. So the first offer is always your best offer. We've said that from the day I learned real estate. I think that was one of the first classes I went to. But the people that are having houses sit on the market for 30 days and they haven't done a price drop, that could be something that they really need to think about, because it's just not the same market we've been in, and it's competitive, but sellers are all about it's a seller's market. Yeah, it's still a seller's market. But
Based
the
on what
buyers
you're
are,
going to get.
yeah.
Not from where you purchased it.
Right, not because you need to pay a bunch of bills off and this is what I want.
Yeah, that really. That
So are
bugs
you
me.
seeing
That
less
bugs me.
buyers in the market right now? Is
Yes.
that what, because we're feeling that?
Yes,
Is
we
that what
definitely
you're-
are. Yep, no question.
And have you had people drop out?
I wouldn't say drop out, but they're not actively looking.
Are they fatigued or are they just patient? Because those are two
I think it's
different
both.
things. Okay.
I think it's both.
It's case dependent. But
Exactly.
Yeah. I mean, I just talked to somebody before I came in here, and I was like, if you give me a year, I can find you anything you want, and we'll be just fine. But like this idea of if you need something in 60 to 90 days, I can do the best I can in 60 to 90 days. Like that's, whatever gets put on the market, we'll go after it. But if people are patient the way they used to be, right, you tend to have happier clients. That's just the reality of it.
Yeah, don't come to us and say I need a house because my mortgages or my landlord is kicking me out at the end of the month,
Oh,
and you've
gosh.
known that for 6 months that your lease was coming up. We can't jump that fast, and I mean closings take at least 30 days, but
Yeah.
just
14 to 21 with first 5
yes,
people. Just
that's
saying.
true. That's true.
As long as the
As long as they send you your dogs.
Right, exactly.
And as long as the seller can get out, right?
Yeah.
The seller needs to go. But the sellers too, they need to understand when they're trying to sell their house, the process of saying I want to sell my house and I want to do that and have my house. You've said this a bunch that you could get contingent offers accepted, but that's hardly the case. It can happen and it happens.
It's definitely not the norm.
No,
I'll say
so
that.
saying that I want to sell my house to buy a house, well then if you're not going to put your house on the market, then we can't be looking at houses yet. It's just, if your house isn't going to be on the market and you need that money to go through that process and go, well, maybe they'll take the contingency. Well, the only houses we can probably get a contingency on is if they have sat for a long time. But going out that first weekend and looking at a house, no seller is going to take that offer.
So why don't we discuss bridge loans more often?
What's the difference between a bridge loan and a recast? That's my question.
Well, recast is basically say your mortgage is $200,000, you put $50,000 down, it goes to $150,000, they amortize your payment.
So why would you do that over a bridge loan?
Well, a bridge loan is different. A bridge loan basically takes the equity out of the home that you want to sell to buy this home. So once you do that, you're still going to be paying interest on that bridge loan. But when you sell your property, you can still pay down the mortgage on that.
Or you can get rid of it and do a whole new one.
You can- yeah.
Refinance.
Yeah, exactly.
Yeah.
Or recast it. Couldn't you?
You could,
Yeah.
but we've got a program called Quick Move, and it's a little unique. I don't know any other lenders that are doing it, but let's say you have a house and you've got $400,000 of equity and you want to buy this house. Normal ratios are 43%. You combine both houses, we go up to 65%, knowing that they're going to sell this house. We can take the equity out of this house,
And put it down.
there. Or what's even better, let's say they want to keep their equity here and they got this house here. If they've got 5% of their own money, they can put that down. So you'd have a 95% LTV, no PMI. Then when they sell the house, they buy it down. It saves them expenses on the bridge loan or where they're getting their money.
Interesting. But I it's odd that, so first-time home buyers, that's the easy stuff, right? But
Right.
why are we not seeing more of those type of loan products going? Instead of contingent offers or whatever it may be, like why are we not seeing more of that in play? I feel like I saw more of that in play in 2018 and 19 than I do right now. And it's more needed right now.
I don't know why. Because, I don't know that many companies that do it.
That's fair. There's
Well,
not a lot. But
Yeah.
The other point, though, is that you're talking about the quick move. I'm sure this takes a little bit of time to get prepared for. You probably have to do an appraisal on that property?
Just a broker's opinion.
Okay, so broker's opinion.
Or if it's listed. So if it's listed, I don't need it because we already get a listing agreement on it.
Yeah.
And you just go by the list price?
Yeah.
And
Within
then that's
reason.
what's your number.
Probably the error
But,
rate
but
there.
still, it's not like I tell you I'm going to be looking at a house tomorrow, or I just looked at a house this morning. I'm going to write an offer, and you're going to use this quick move program. You can't jump that fast.
No, you need, because there's a lot of moving parts.
Right.
Because both houses, you have to take both houses and say you have 80% LTV on both houses. So it's not somebody that's going to have little equity in their house.
Yeah.
They're going to have equity in their house.
So this is where we say, when you're thinking about buying a home, there is some preparation to
Right.
make. You can't
Talk to
just
a
go
real
look
estate
at houses and
professional.
write an offer, and you're the first stop.
Thank you.
We need to know what you can afford and what you're comfortable with
Right.
affording.
That's the key.
Yeah, because people say, hey, I want to move. And I'm like, all right, well, what are we looking for? And then, like I just got off the phone with somebody and they're like, we want a ranch with a basement. And I was like, all right. So, like, give me a price point and I'll let you know if that's even doable. And so then I'm just like spitballing numbers of what it's going to be at because they haven't even talked to a lender yet.
Right.
I mean, I can get you a ranch with a basement in Hamilton County for like $700, or like maybe $500 depending on where it is. I start getting into Hancock and McCordsville, all of a sudden, I can get it a little bit cheaper or whatever it may be. But like,
But a buyer always seems to have an idea of what they are going to start looking at. Like, a lot of times you get the phone call. I've been on Zillow. We've been looking at houses between $300 and $400, and I'm like, God, did you get that number? Like, where'd you get that number? Well, we ran, they ran the numbers somehow. However, they magically ran the numbers. But you're the person. You're the final
Right.
stop. You're going to be the one that says if you're going to get that check at the end of the closing for your purchase of the house. And
Right.
so we can't just jump and go. Don't ever, agents, take the word of the buyer that they said that they've been pre-approved and or have a price in mind of where they should be. Have a pre-approval in your hand, because if you come to the point where you're looking at that house and they say they want to write an offer, you're not going to be able to get that offer accepted without it.
yeah.
So that's a whole process that
Well,
frustrates me.
The other thing also, interest rates are driven by credit scores.
Mm-hmm.
So if you have a 660 credit score, it may cost you 0.5% more to buy that house than someone with 700.
Yeah.
So
Or
it's-
780.
Yes,
Yeah.
so it's very important, that credit score. It also affects your homeowner's insurance.
Yep.
So
But and I don't want to slander a brokerage. That's not my intent here with this, because Zillow is a brokerage. So, my curiosity
No, I
is
understand they use it. They actually go there and use that wonderful.
no, they do
brokerage.
on the
Yep.
on the mortgage payment thing, and I
Oh,
don't
yeah.
know what like is it just a
I don't know. Where
I don't know where it comes from. But I've had people be like, I want to do this. I can buy it, and I'm like, we send them to a loan officer. It's like $700 higher. It's not even like close how much higher their actual payment is. It's
Well,
insane.
they don't know what the rate is
Yeah,
because they don't have a credit score. So how are you going to determine what the rate is? Number one.
and it just throws a number on there. It's like your mortgage will be this
Exactly.
much.
Because they heard today's rate is 7.2, so they plug that in, but that's not for them because their credit score is not the right.
Right.
Because they're not a prime rate.
So, and that's
or
the other
whatever.
thing, we always have buyers that are like, well, I'm going to call around. So calling around doesn't get you apples to apples, right? So like if they call you and they call Joe and they call Sam on the same day, it's not apples to apples,
No,
right? Yeah.
not-
So that's what people don't understand
Right,
either.
exactly.
It's like, well, Sam said he's going to be able to do this for me. I'm like, well, what did he miss, or
prices drop.
what did he?
or
What's it
prices
going to
go up,
what's it
or
going to
credit
cost
scores
you?
get
Like
better.
what's his charge?
Yeah.
So that's the whole nother thing. They think that you're just going to be given the same numbers, and they shop,
Right.
and that's not the same either.
I mean, the thing that if somebody calls me and they're shopping, they'll say, "What are your closing costs?" I'll tell them what the bank's closing cost fees are, and then you'll have the appraisal, and then we don't know the title company fees, so we have to wait till we get title to send us over what's called a pre-CD. So
Yeah.
we can tell them exactly what our fees are, but I always tell people that we'll know
gonna
when
change.
the title fees are going to change. So
Plus, sometimes, I mean, this is just me. It's not always about the dollar amount. You know, I've seen people like move over $50 or $20, but
We want to get to the closing table without
I want to get to
a
the
bunch of
closing
stress.
table. And like for me as a consumer, like not even as a real estate agent, as a consumer, I want to be able to talk to somebody, right? And that matters.
Right.
Being able to talk to a loan officer. Again, I'm not trying to slander. This is going to come out as slanderous, and maybe it is. I don't really care at this point. Like I've dealt with Freedom, right, mortgage before when I'm helping people sell, and it is jumping through hoops to get any information through Freedom Mortgage. Now I get it. They are massive. They have a ton of, and you're just another number in there.
Right.
And they
Well, it's
help
the
a
same
lot
with
of
a
people.
lot of them. Yeah.
Yeah.
well, they're a big servicer.
They're massive.
Yeah,
They're
they're
so
huge.
it's understandable, but like I would pay $50 more for customer service for peace of mind.
I agree.
But
Totally.
but I'm not everybody's like that. Fair. Like some people, it's just like, yo, I need to save money, right? But to me it matters because if something goes wrong with your mortgage, like that's a bad day, and you'd like to talk to somebody.
But it's like with first time, it's the biggest purchase they're going to make.
Yeah.
And one mistake can cost them thousands of dollars.
Yeah.
And that's why it's important to sit down with them and say, okay, these are going to be your costs. This is going to be your payment.
Yeah.
Like a new construction. Before they used to just, the land was taxed.
Yeah.
Say it was $20. That would be your payment, $20. Now it's 1% of the purchase price, and we start that immediately.
Yeah.
Now, what probably will happen, depending on which county you're in, by the time they assess it, you may have too much money in there, then we give it back to them.
Yeah.
But it's better to have too much than too little, and that's what happened back when the market blew up.
Yep. And we could do a whole
I
episode
know,
just on construction loans. We should do that sometime.
boy.
Like how you guys release it and everything like that.
We're real big in construction loans.
Because
Big.
people are like, I want to build a house. And I'm like, all right, like, do you know how this works? It's like a little bit more complex than that. We have to buy the land, we have to get a construction loan, all of that stuff. So we should have you back on just so we can talk about construction
I would
loans.
love to.
Yeah, we should get a custom builder on here too at some point. We've talked about it in the past, but
All right. Anything
market's
else you
busy.
need to tell us that we all need to know that we wouldn't even know to ask because it's on your side, not ours? I always say, stay in my lane. You tell us what's in your lane.
We pretty much covered everything. It's not rocket science. I mean, it's pretty standard, and just the information that we need. Now we just need inflation to come down. That's it.
Yeah.
I mean,
Yeah.
that's probably the number one thing.
the worst part about that is when inflation comes down, we're going to end up just pushing everything again in 2 years because the prices will go back
Exactly.
up again. It's
Totally agree.
It's so tough. It's so tough.
Day
It's
by
like,
day. Day
where
by
are we going to
day.
be in 10 years? Like, I don't know. But,
We're going to be in 2 years.
yeah.
clue.
I have
6
no
months.
idea.
We've been talking about this. We thought after spring break we'd see a lot of changes, and here we are 3 weeks later, and we're just kind of like, it's not happening yet.
Yeah, but here's the cool part. It's nice outside. So that
Yes.
works.
It's warm.
Yes.
That works for me, man.
Yeah, and it's the month of May.
It is. It is.
Time to go to the track.
Yeah, I don't want to do the track the way I did the track this weekend. That was a whole mini
Oh,
marathon.
he did the mini.
Okay, so for the record, my kids and my wife came and saw me. They want to do it now. Dude, it's a cool event. Have you ever done it?
I've been there to watch somebody cross the line.
So that's a no. You haven't done it. Have you
No,
ever
I've
done it?
never done it.
No,
No, I
cool.
will not do it. But
Dude,
I
it's
watched
cool.
cross the. It's the environment is
Dude,
really
there's
cool.
like bands like every corner.
Well, people they're all along the way just yelling at people, and
Oh, it's so
just
cool.
it is cool, but it's a big achievement, and you just walked it, and I'm not even gonna say the word just. That's a big achievement. That's a long way. Like I said, from here to Broad Ripple, I don't know, and I just wouldn't
Yeah.
decide one day to go. I'm gonna walk to
the
Broad
mountain.
Ripple today.
Well, I would have jogged it. Thank goodness we didn't have to run it or whatever because my brother had surgeries. But so I actually.
Well,
I'm glad he
congratulations!
did
And
it.
so your family's all gonna do it next year together.
We are, which also gets me out of running it. So
There you go.
That's
kind
cool.
of.
Well, fun.
But it's really really neat. I've never done it before. I encourage anybody to do it. It's
How many people did it? Wasn't it like
20,000.
20,000.
That's crazy.
Here's the crazy part. The guy who won it, he's from Ohio. He did it like in just over an hour, right? Now, mind you, it took me 3 hours to walk it, right? The lady who won it, she's from Carmel.
You're right.
And she's pregnant.
Yes, that's right. That's right.
How
She is
far
right.
along? We don't know. You didn't get that far? You didn't go up and ask her?
Does it matter?
Yes.
Well, wait a
Well,
second. Does
She's
it?
34 weeks or something
She's
like
34
that.
weeks?
Yeah.
And she ran it in like an hour 15 or something crazy.
Good for her.
Dude, that's insane. That's so fast. I'm
So-
telling you. And the crazy part that it's really neat to watch because it's more about pace. Like we walked at a really fast clip. We were like 15 minutes a mile, but I would watch people like run past me. And like it's like degrading almost. You're just kind of like, all right, yeah, I get it. And then 2 miles later, you're walking past them because you kept the same pace. Like you just gassed out. You want to be like, yeah, buddy, what's up now? But you can't because
But
it was
there's
an
all
80-year-old
levels.
lady or something.
Yeah, but it's all levels. Everybody's there to do it for a different reason,
Crazy.
and you had a reason for yours.
So that is the thing. I do think everybody who's doing it is doing it for a reason, and so that's why it's kind of a neat event.
Yeah.
So
Yeah. And
you
I
should
saw.
do it. You should do it.
Oh, well.
I'll tell you this. I can like make this look like in a really good light, and it was fun, but like there's just nothing awesome about it. Like it's 13 miles. Your feet hurt. It's a thing.
Yeah,
So,
yeah. Well,
what do you think, Raquel? I think she should do it.
Yeah,
And you should do it.
No,
with
no.
her. Yeah.
No.
All right. I got a whole year to get you guys into it. All right. I'm gonna bribe you. What if I pay you to do it?
well, there's a whole different story.
There we go. Everybody's got a pain point. Okay. Anyway, so if anybody, we got to do stats real quick,
Yep,
and then
go ahead.
we'll get your information out there. So, it's really kind of interesting. So for Fishers and Noblesville, inventory has gone up a little bit, which is what we want to see. Fishers in particular, it's kind of so days on market has gone down, but the median has gone up. So things are in general, as a whole, selling quicker, but not as quick as they were like a couple weeks ago, if that makes sense, right? So 57 went on the market. Now keep in mind, like I did Monday. We're doing this on Monday this week, so I did Monday to Monday. So it's a little bit different than what we usually do on Tuesdays. 57 went on the market. 36 of them are still active. 21 pended, but 53 actually pended last week, right? So we had a net of 4, but 57 going on the market is a ton, right? Those are the
There was a
numbers
lot
I
of
like to see.
pendings, too, though.
53, it's a ton.
Yeah.
We have 151 on the market that are active. 24 days is the average days on market, but 8 is the median, which is actually kind of higher than what we were. Just I don't have to
So a
look
little
real
over a
quick.
week.
Where were we? I'll look later. But for Noblesville actually is increasing its pace, ironically enough. So Noblesville, I had 30 go on the market. 17 are still active, 13 pended, but 28 actually pended. So I had a net gain for inventory. I have 107 on the market in Noblesville, but their average days on market is 18, and their median is down to 4. So Noblesville currently, even though there's less on the market, is outperforming Fishers in regards to what I would say days on market. So
Right.
it's kind of, which is interesting. Which I would say a year ago that probably they would have flip flopped. I mean, they're always really really close, but it's interesting that considering that we're in the spring market right now, that Noblesville is outperforming.
And how many homes are active in Noblesville right now?
107,
And how many in Fishers?
151.
Wow.
So.
And Fishers probably has a lot more new builds than Noblesville.
I saw when I was looking at it. You know, the interesting thing about Fishers, I think I saw like 4 new construction that were above like 1.2 mil. Like it didn't even have pictures. A picture of the blueprints, like type stuff. You know, I mean, I think
Yeah.
it's not even in the ground yet. They probably haven't even started on it. So, it's just kind of interesting that we're gaining inventory. We're not gaining a ton of inventory, but it's a good sign. So hopefully it puts us in a good position come 30 days from now. But without buyers,
Right.
what do we do? But so you feel it, I feel it, Shelly feels it, but the numbers do reflect that there's still buyers out there, right? So it's just odd
But, like-
because it's hard to quantify. That's what I was telling you. Like, I don't have the data to really support what's going on right now, but being in the market as much as I am, or you are, or as you as well, like I can feel it. It's different.
But here's what I think if you look at it. So we're saying, I had the same instance that you said. Put a house on the market in Westfield. 6 months ago, I would have expected, and I say to my sellers, I don't know what to expect. I'm not going to tell you to move into a hotel for the next month. I'm not going to tell you I'm going to ask for offers on Sunday. Let's just see what happens day by day. That house 6 months ago would have probably had 30 to 40 showings in that first 2 to 3 days. We had 4.
Yep.
We still got our offer. So these houses are pending. These houses are pending with a lot less showings. So we are having less buyers go through these houses, but there's still enough buyers out there to suck up the inventory.
Yep.
That's what the difference is. We just don't have 50 people going through a house anymore.
So the
we have a
interest
lot.
is different, and I can't quantify that other than I just see it.
Yeah. And you're seeing it with less showings, and that gets to the point where the sellers are like, oh, we got an offer and it's at list price and it's been 4 days. Well, it really depends on, did you have very many showings? Because the buyers are ready to buy if they come through your house, but they're a little baked on spending too much money with the high interest rates. So that's why I think it's interesting, is just the showings are down, which means we have less buyers, but the houses are still selling. So I quantify that because we're saying how many pendings there were. Yes, we're still selling houses and they're still coming on the market. There's just not as much traffic.
Yep. And so that's why it's good to have you on here, because you feel less applications, right? And so that's the beginning of it as it gets into us, and we're more of the end result of that.
Yeah,
So,
yeah, the trickle down.
And I think we'll start seeing activity pick up, because I think rates, hopefully they start coming down. Here's a stat. I think the consumer is finally getting used to high rates. Before they're used to 2, 3, 4. That may never come back. But interest rates have been over 6% for over 580 days. It's a long time.
That's a long time.
Exactly. So, the experts say that, we get in the 6s, then we'll see a lot more activity.
Mm-hmm.
But
That's crazy.
Well, and did
I
you?
wouldn't
I
have
mean,
even thought it was that long, actually.
yeah.
yeah,
it's
that's
crazy.
over. That's how. Oh my
It's
gosh,
almost 2 years.
Yeah.
I mean, we're not that. I mean, year and a half over, right?
I had no idea.
But I think the consumer's getting used to, okay, it's not going to 4, it's not going to 5 right away.
Which is what I think everybody thought.
Right.
Let's just wait it out,
Yeah.
wait it out, wait it out. It'll go to 5. It'll go to 5. And 6 sounds really good right now.
Sounds very 6.5.
I got a lot of people who'd love a 6.
Yeah, exactly.
Yeah.
Yeah. Okay, so I'm going to do the stats. So in Carmel, it's just basically steady, same as it's been for the past few weeks. And like I said, that has more to do with the fact that there are still buyers out there, just not as many, but they're still buying. There's 43 houses that hit the market in Carmel this past week. 23 of those pended, and a total of 32 pended. So we had an inventory above of 11. So that's good. We had a little bit of active inventory go up. Currently in Carmel, we have 108 active. That's low. We've been on the average of 140, 150 for a long, long time. We've been here around 110 for a couple of weeks. So current inventory in Carmel is lower than it has been for a while. In the past 30 days, 122 sold. And the list to sale ratio is 101% on those that 30 days. So that's showing they are willing to pay that. But the average days on market was 6. The median was 6. The average is 33. So again, like I said, Carmel has pretty much been the same and steady for the past 3 weeks. All the stats are showing that. Westfield, 47 hit the market. Only 15 of those pended, but a total of 19 pended. So a big increase in inventory in Westfield. 209 are currently active there. We know most of those, are at least half of them, are new builds. In the sold category, there was 117 that sold in Westfield. The list to sale ratio is about 99%, and their average is 21, and the median was 25. So we are seeing Westfield, again, like I said, Westfield to me is staying the same. They are staying in the same in regards to the days on market. They're higher than the towns around them.
Of all the places we need inventory, it's not Westfield.
Right.
And they keep getting more inventory.
Right.
Like, I need it in Noblesville,
Right.
I need it in Fishers, we need it in Carmel, we need it in Zionsville.
And I didn't break down, of those 47 new builds that came on or the houses that came on the market, of those 47, how many were new builds? So that's a whole breakdown, because Westfield's its own little town of new builds.
Yeah.
That's it.
And we just don't know how much of those are even out of the ground. But Westfield is staying the same also. It's just a slower market there, which still, I say that comparative to 3 years ago when we were having, a lot less, not even 3 years ago, 2018, when we would be worried about 6 days or 6 months on the market.
Yeah.
We're only at 30. So Zionsville, 12 hit the market. 8 of those pended, a total of 14 pended. So we lost some inventory there. They have 38 active. 39 sold in the past 30 days, 100% list to sale ratio, and their median is 5 days on market. So Zionsville staying slow and steady like always. It's just a place, if you have a house for sale or that you'd like to sell in Zionsville, you're going to sell quick.
Yep. Well, I don't know. It's interesting to have you on. Like I said, kind of like we have been feeling some the undercurrent of the market, and we did that. I can remember when the market was doing really well, and I want to say this is when we were doing the other podcast, and I was telling people that things are selling over list, but something feels off because I'm getting 6 showings instead of 16, or 6 offers instead of 16 offers. It's like this is pivoting pretty rapidly, and it was June, I think, maybe of, what was that, 22 or something like that. I'm not saying the same thing is happening right now, but like I can just feel it. It's like what we felt in December when we thought things would be differently. So it's nice to have you on, Pat. So like you're feeling it too, and you're before somebody even gets to, well, not always, but like you get to see a lot more of a bigger population than she and I, because obviously
You see all the buyers, we see
Yeah.
1 or 2 or 3
Right.
of them.
correct,
Exactly.
correct.
So you're our funnel to see what's going on the
on a macro level.
yeah.
Yeah, but the pre-approvals are still pretty strong. I mean, they're just looking for houses.
Yep.
Can't find them.
Can't find them.
Yeah.
I got 107 of them for them in Noblesville if they want them. But we looked last week, and so in certain areas, so there was like 30 on the market in like the $400,000 range. But if you're looking in like the 6, there's like 8. So it's just really, really tough. So anyway, so if somebody wants to get a hold of you, how would they get a hold of you?
Phone number 317-590-4457.
All right. My name's Kyle Morris. I'm with Morris Property Group and FC Tucker. My number is 317-649-5122.
I'm Shelly Walters, the Shelly Walters Realty Group, and FC Tucker. My phone number is 317-201-2601. Thanks, guys. Please like and subscribe, and also let us know if you have any topics you want us to cover, or if you'd like to be on the show to cover something you think would be interesting to the public, and we will see you next week. Thanks.